Good morning. It is Monday, January 10th, 2022. Welcome to Dad Bod Trading. And the sixth morning bits, I think. Let me see here. It doesn't matter much. No. 3. No. Okay, this would be the fourth. Maybe I made another one and didn't include it. But anyway, that doesn't matter. This morning, I'd like to talk about some chart patterns. And these are very basic chart patterns, but they are good to memorize and keep in the back of your mind as you're trading. One of the most ridiculous things about people who teach chart patterns is that they'll go to these charts and they'll be like, oh, look, here's a falling wedge, here's a bearish rectangle, here's a bullish pennant. But everybody can be a prophet after the fact. And when you're looking back on past chart history, it's very easy to find these patterns. You can be like, oh, wow, there's 5 of those that happened in the same day. Wow, this is great. This must be really reliable. This is amazing. Problem with that is when you're sitting there watching these patterns develop, it can be very confusing. You don't know exactly what it's going to look like. They aren't always perfect. They don't always look exactly like this. There's variations. You'll have candle wicks that breach your chart lines and then snap back down below them. It can be very confusing, so keep that in mind. These are kind of like, what did they say in the Pirates of the Caribbean? They're like, these are just guidelines. And that's basically what these chart patterns are, is it's just guidelines. Some of the most important things to keep in mind as you trade these patterns would be your entry, your stop, and your target levels. I can't stress that enough. Like, those are the 3 things in trading that if you don't know one of those, you should not be in a trade. I understand sometimes things happen quickly and you want to trade on the fly, but ideally you must at least have your stop figured out. You might not have your target figured out, but man, it's just so much better if you can have all 3 figured out beforehand. And when you get experienced, you can just boom, boom, boom. Within seconds, you can look at a chart and say, okay, here's where I want to enter. This is where my stop is going to be, and that's where my target's going to be. Perfect. Awesome. If you can do that fast, that is fantastic. But usually you can only do that after several years of watching charts and getting familiar with the ebb and flow of the market. So just be aware that with each one of these patterns, you need to figure out your stop, your entry, and your target before you enter the trade. All right, let's get into it. So a falling wedge and a rising wedge. So on the excuse me, on the top here we have bullish patterns. On the bottom we have bearish patterns. Bullish would be you're going long, you want the price to go up to make a profit as it's going up, or if you're playing the options, you want to buy a call with these patterns. And with the bearish patterns, you're going to want to short it, go short, or if you are playing the options, buy a put. It's the same thing as shorting a stock. So let's say falling wedge, you have a rise in price. You get into a little bit of distribution where some of the selling pressure comes back in, but it's basically holding a support level. You don't want to enter at the bottom necessarily because it could keep trending downward a little bit more. You want to buy at the break of your top chart line, and your chart line is going to just be skipping on the tops, these lower highs, and the support line is going to be skipping along the bottom of the chart here. Your entry is the break of that pattern, because that means that the buyers have taken over and there aren't enough sellers to suppress that price. Again, like I've said before, when you're charting, you're just trying to figure out where the buyers are and where the sellers are. And depending on what you're doing, whether you're going long or short, you want to go with the pack. That's how you make money. You just do what everybody else does. And that doesn't sound very exciting, but hey, good traders are boring. So entry is going to be the break of that pattern, and your target's going to be up here based off of your previous charting and resistance from the previous day or hour or whatever you determine to be your target. Bullish Rectangle. For whatever reason, I always call this the Bearish Triangle. I don't know why. It's probably just because I didn't learn shapes very well when I was little or something. But anyway, bearish or bullish. See, I can't. I can't this morning. Bullish Rectangle. We're going long. Again, you have some sellers up here, buyers here, sellers here, buyers here, and they are on equal footing. There's just as many sellers as there are buyers, but your entry is when you run out of sellers and the buyers take over, and then it breaks out of that channel. Bullish Pennant, same thing. It's very similar to the falling wedge, only you have, instead of a descending support level, you have a rising support level. Previous price action is very bullish. You hit this wall of sellers. Then you have support of buyers. And again, you have sellers, buyers, and it just keeps on going until there is a break of that pattern. On the short side, you have a lot of selling pressure. You find a support level of buyers, and then the sellers are up here, continues to rise, and then ultimately it can fail. Now, if there's heavy enough support here, sometimes you'll have another bounce on this previous support level. So be aware of that. When I do this pattern here, I will oftentimes sell half of my position at support, just to take some safe profits. Bearish Rectangle. This is one of my favorites. It's just so simple. It's so easy to see. It goes down. I think in one of the previous video, I showed a bearish rectangle on Apple. So easy, so clean. One of my favorites. I think the rectangles are my favorites, like I said. And then the Bearish Pennant, same thing. It's the opposite of the Bearish Pennant, essentially, where you want to break this low, the support line, diagonal support line. So I think that's about it. If you have any questions about it, you can just let me know and screenshot this, keep it around. I have another page of some more patterns that are very handy, and we will discuss those maybe tomorrow or sometime later this week. But for now, thanks for watching, and I will see you around 8 o'clock for the live trading. So take care now.